If you could share, the nuances that you have observed, while you're trying to evaluate pricing power across some variety of businesses, that would be great for the audience to learn from.
Yeah, I mean, I think a lot of times pricing power, it's really as easy as talking to a customer and saying, "When's the last time the company raised prices on you?" And they'll usually tell you. And if the answer is 10 years ago, well, it may not have a lot of pricing power, right? For some companies, you often have pricing is built into the contracts, right? You have 2 to 3% escalators, and that's something you can learn from customers or from ex-employees, or sometimes the company will just tell you, right? But another way to do it is you basically, and this is more understanding what I would think of as latent pricing power, is ask customers how much they pay for it and when the last time is the company raised prices. The example here is I'll bet you every single person on this call knows exactly what they pay for their Bloomberg or their firm pays for their Bloomberg. And they're probably not real happy about it, right? And if somebody knows exactly to the penny or the rupee what they're paid, well, it's on their mind, right? And that means there's probably not a lot of what we would call consumer surplus. Whereas we invested in a company interesting recently that has some very good tools in digital advertising, and most of the customers couldn't even tell us what they paid for. They're like, I don't know, a couple grand, I'm not sure. But they all also said, it's critical to my work, and they could raise the price 20% and I wouldn't care. That's pretty interesting, right? That indicates there's probably a lot of latent pricing power that the company could take. And so I think some of this is just you can understand it explicitly with are there escalators or when did the company last raise prices? But some of it is also just what's the consumer attitude towards the product, right? Do they feel like it's abusing them? I mean, in fairness to Bloomberg, the product does get better every year, right? They do a good job reinvesting in it. The ones where you're really, I think, in trouble is what I would think of as legacy software packages that milk the consumer, right? They don't reinvest, but they know it's hard to switch, and they just keep hiking the price every year. That's where eventually what they're doing is they're creating a profit umbrella that makes it, more lucrative for a potential competitor to show up and do something new.